Hey everybody, how's it going? Good evening, good morning, good night, depending where you are in the world. Welcome to a Capital Hungry Monday market analysis stream. Through the next 30 to 40 minutes, I'll be giving analysis both fundamentally and technically on gold, GBPJPY, GBPUSD, EURUSD, USDCAD, as well as US 30 stock market index. We will go through the process of looking at what fundamentals are impacting the market, what economic events we have on the docket, the current market sentiment analysis, as well as trade ideas across those pairs listed out. Okay? So let's just jump right into it, and let's just jump right into the meat and potatoes and what everybody is here for. So, some recent fundamental points that are in focus that's impacting market sentiment is, of course, the short-term optimism. As we've had the flood of Russia and Ukraine headlines, a lot of those various events, including the actual invasion, the casualties, the physical infrastructure damage Ukraine has undergone, as well as a lot of the economic sanctions put on Russia by NATO countries, all of that has already been priced in, okay? So we have to understand that the market moves in waves, and we can see that the equity markets and stock markets across the board are having a very aggressive bounce as we're approaching the end of a quarter. A lot of the fear tensions regarding Russia and Ukraine are priced in with no new events on the table. We can also see a lot of the various interest rate decisions and 25 basis point hike, whether it was from the Federal Reserve or the Bank of England. All of that information, from the reactive fundamental catalyst to the economic events, have been priced in. So we want to understand that at the same time we're coming towards the end of the quarter. We can see Japanese yen is individually bearish. Dollar is individually bearish just in the short term, pulling back from new intraday highs. The same time, stock markets are very bullish across the board. So market sentiment in the short term is optimistic. We are looking to play, especially to close off the quarter, and especially if fear tensions stay relatively quiet and we don't have any new events to price in when we're looking at reactive headlines, we are looking to play short-term weakness in the US dollar, short-term weakness in the Japanese yen, and some more strength with buy orders flooding the equities market from that very aggressive dip. When we're looking at market sentiment individually, you can see the confidence that's coming back into the global stock markets after that initial fear, uncertainty, and doubt coming from the Russia and Ukraine tensions was priced in, and various dips were created from lower demand zones and more favorable price points. Now, obviously, as we're entering rate hike territory, we're transitioning out of the stimulus stage by central banks. I'm not saying the stock markets are fully bullish, gonna go to new all-time highs. But as intraday traders, manual retail traders who scalp and day trade, primarily play session volume or will be in positions for maybe a day or two max, you want to adapt to the market waves accordingly. And what we can see right now is, of course, those fear, uncertainty, and doubt related tensions, whether it was Russia and Ukraine, whether it was the inevitable interest rate hikes that have already been digested, all of that is priced in. The same time, again, we're coming towards the end of a quarterly period. So we're seeing that slowdown in volume and volatility. We're seeing that bounce in the equity markets from those lows. We're seeing the pullback on dollar pairs from the lows like GBPUSD or EURUSD. And we're going to talk about that as well. Okay? So when we're looking at the dollar index and stuff here, it's very normal, especially as we're coming towards the end of a quarterly period, that yes, the dollar on the higher time frames is bullish. But it's also very common during the end of a month, end of a quarter, or even the end of a year, that when you have these significant highs printed by buyers, you can enter this pullback phase that can extend for a potential series of days or weeks that goes to collect more buy orders from better demand zones before continuing bullish again. We can see that a lot of the fear, uncertainty, and doubt tensions with Russia had us revisit these highs. we created this technical double top and failed to break, and even the 25 basis point rate hike by the Federal Reserve was already priced in, so it didn't lead to any more upside on the dollar. And as long as we stay below the 99 handle to close off the quarter, we can still see some short-term dollar weakness and potentially play that dollar weakness accordingly. I would only be back in a dollar bullish bias if we were to break above these highs or get deeper pullbacks to previous highs around 97, 97.5 handle before continuing up again. So right now, in the short term, we can see the exhaustion by buyers on the dollar from these high points. We can see the short-term weakness there and sellers jumping in. We can see the Japanese yen individually is dead and bearish as a safe haven currency. The volatility index, which is your fear and greed indicator in correlation to the US equity markets, this being the inverse information of S&P 500, very bearish as well, showing us market optimism is relatively stronger. Okay? So, now, before we jump into the trade ideas and technical analysis across pairs, we want to understand what economic events we have on the docket. Luckily for the majority of people who are trading London session, Asian to come, even New York tomorrow, not much going on. We don't have any economic data reports through Asian session or really anything going on tomorrow. We have some producer price index data at 8:30 a.m. Eastern tomorrow. And that's pretty much it. Not too much else is really going on. So quiet night in terms of economic data. I'm personally expecting volume and volatility to be a lot lower and slower. So adapt to the volume and volatility decreases as we're coming towards the end of the quarter, as a lot of the fundamentals have been priced in, as we're seeing that slowdown in volume just to even start off this new week. And we don't really have too many economic events on the docket to bring some induced volume and volatility from those reports. So for anybody who's trading Asian, London, New York tomorrow, your main focus is looking at reactive news headlines to see if we get anything new regarding the Russia and Ukraine tensions. New fear events at this point would be NATO countries either getting their military involved to support Ukraine, or NATO countries further instigating Russia by bringing Ukraine into the NATO treaty, which would push Russia over the edge, as it would show Putin that, hey, right next door, my neighbors are going to be having weapons from the enemies or bases from the enemies pointing right at me. Whole Cuban Missile Crisis repeat. For any of those you can go research that yourself. Okay? But we haven't had those events yet. I know obviously the invasion is still ongoing. The tensions are obviously still ongoing. But in terms of market impact, all of those events have been priced in. Okay? Now, let's look at gold. Gold is very, very interesting, and we have to be careful when we're looking at it because, of course, we were playing the bullish market structure. You have war tensions, you have high inflation, you have bullish price action and market structure. But we peaked to a very surgical point that is exactly at previous all-time highs printed from the pandemic. As we printed these highs and a lot of the fear tensions got priced in with Russia and Ukraine, you can see we had a pretty equal snapback and pullback, which is normal when you look at gold's impulsive moves versus corrective moves in relation to the fundamental catalysts at play. So when I'm looking at gold here, I'm actually looking at a very similar situation on the higher time frames as this. And I'll show you that in more detail. So you can see here, we previously had this higher time frame demand zone, which I'm going to mark in green, where we had buy orders flood the market from this demand zone. Fundamental fear, uncertainty, and doubt, and high inflation, which had gold over a period of 2 weeks have a huge upside move. Buy orders flooding in from the 1780s, taking profit at new intraday highs. A pretty equal correction. We don't break that demand zone, still maintain overall bullish market structure, and start chugging back up to these high points, right? Very similar idea right now. From this demand zone here, which was roughly previous highs to the left, around 1880s, 1890s, we had massive tensions when Russia was first invading Ukraine and the economic sanctions were starting to escalate. Gold buyers flood the market monstrous upside move made on gold as the buy orders are flooding the market. We hit that exact same previous all-time high. As we hit that all-time high, you see buyers liquidate positions, exit the market, sell orders jump in hand to relieve them out, a pullback to that same demand zone in failure to break so far. We can potentially range here on gold for a period of days and weeks, especially as we're coming towards the end of a quarterly period. But my expectation is as long as gold is still holding above the 1900s, yes, we might have some intraday downside plays, but I'm still expecting us to hold the overall bullish market structure above this higher time frame demand zone at the 1900s. Does that make sense in terms of the bullish market structure, the impulsive moves versus the corrective moves that are induced from the fundamental catalysts, the profit taking by buyers, which creates the aggressive pullback, the similar technical repetition as well, right? So I'm still in a bullish bias on gold. The structure is still bullish. This is just the way the beast gold behaves, right? You can see many times you'll have some aggressive upside plays with very equal pullbacks that don't break or shift the overall structure. Okay, one second here. So when I'm looking at gold here, I'm still bullish on the intraday time frames now, especially as we had the previous daily candle grab some liquidity from these lows and fail to break. But I do see the probability of us entering a bit of a consolidation zone. So I'm looking at pullbacks to 1920 buys or breaks above 1940 buys, which I'll show you here more on the intraday time frames when we're looking at the key levels. So trade ideas for gold. Inflation fundamentally is still high. Interest rate decisions have been priced in. Okay, still bullish market structure on the higher time frames, but volume and volatility has slowed down. We're coming towards the end of a quarter. A lot of the tensions we've been watching have been priced in. This doesn't mean gold is bearish, but it means we're still bullish on the higher time frames, but can potentially consolidate, generate some liquidity as investors and smart money are more on the sidelines, which is very normal towards these changes in quarterly periods as well, especially when we've had so much of these tensions over the last month that have been priced in. But nonetheless, on gold here, 1923 pullbacks, 1930 pullbacks, breaks above 1945, I'd still be looking to play some higher time frame buys. Okay? If we have any new fear tensions come up with Russia and Ukraine, that just further supports the gold bullish bias. But there's other economic reasons why gold is very bullish right now. One being a hedge against inflation still being so high globally, and specifically in the US inflation still being high. And two being a lot of the interest rate decisions for rate hikes being very minor, already priced in. I would only sell gold below 1912s. Okay, GBPJPY, GJ on the higher time frames as the fear tensions have been priced in is still bullish. You can see we played some short-term sells as we had sellers fail to break this same high point, and as we rejected this same high point over the last month, this is when Russia tensions came to the table, right? Russia tensions came to the table. It weakened the UK equity markets. It brought some short-term strength to the Japanese yen. This was enough to bring us down to this demand zone again, almost around the 149, 150s. Still failed to break that area with the fear tensions being priced in, a more hawkish Bank of England overall still, and Japanese yen being bearish. You can see the higher time frame bullish market structure for the time being is still intact. That's why if you remember some of the trade idea setups from last week, the 1 minute GJ breakdown, we were calling buys from 152 up, scaling up accordingly, right? Because these short-term sells were just that, profit taking by buyers from the highs, short-term fear, uncertainty, and doubt. I was expecting us to come down to exactly 149 again, but we were just off by one more higher time frame range. So after those fear tensions were priced in, GJ buyers grabbed that dip with the demand coming back in risk currencies. UK stock markets had a very aggressive rebound, showing us an increase in confidence within the UK markets overall. And Japanese yen individually is just dead bearish, okay? So GJ is very bullish. I want to play the buys, and I'm also expecting that we might finally start to get, over the course of the next week and closing off the month, breakouts here and going into new highs, as long as we don't have any new fear, uncertainty, or doubt events to price in, which I think the Russia and Ukraine tensions are going to be pretty quiet until the quarter closes off, okay? So very bullish price action, strong bullish candles, consecutive bullish candles. The only thing we have to watch out for is that every time we've had very strong bullish rallies to this area, we don't always instantly break, and we haven't broken this area before. But with the amount of buy orders collected here, the buy momentum developing, and how bearish the Japanese yen is, in my opinion, it looks like we're going to head to 158 and also start breaking out higher. Okay? So higher time frames are bullish. Japanese yen is bearish. UK equity markets are bullish again. A lot of the Russia tensions are priced in. Bank of England sentiment led to just a price grab and more of a hawkish impact overall when you're looking at the macro. Intraday structure, nice and bullish here. Okay? So yeah, we were playing some of these buys at New York session, 156.8 up. How would you catch the move? You wait for a pullback and you buy. You just press buy in your terminal, buddy. So for the new daily and weekly candle, you can see we started out around here, had a pullback conveniently to the previous highs, collected more buy orders from that demand zone, and a continuation up to new intraday highs now. With the buy orders that have already been collected from this price sensitivity area, we might not get any more pullbacks. We might just consolidate here, have some more orders generate in a breakout to the upside, making our way to the 158s. So if we come to even 157.2, 157, and we don't have any new fear, uncertainty, or doubt, I'd be looking to play buys. Breaks out above 157.5 buys. Technically, price action is bullish. Market structure is bullish. Japanese yen is bearish. UK equity markets bullish. Bank of England still hawkish, which was a bullish impact. So far, fear tensions with Russia priced in. I would only sell GJ below this rejection point and below previous highs. 156.5 is the only way I would shift out of my bullish bias. Now, obviously GBP being a part of your basket of risk currencies is a lot stronger individually against the yen, where the yen is so bearish when you're looking at the overall market structure. Anything right now with your risk currency basket, NZD, CAD, AUD, Euro, is all going to be bullish against the yen. But when you're looking at it against the dollar, the majority of these pairs, AUD USD, NZD USD, Euro USD, and of course GBP USD, they're going to be doing pullbacks or consolidating from significant low points, right? Like you can come here and look at AUD USD. From a significant intraday low point, it's pulling back the same times dollar softer from this bearish market structure here, right? You came to this previous low, it's pulling back. GBP USD from new lows printed on the intraday time frames, it's pulling back the same time dollar is softer. Euro USD from a new low, consolidating and pulling back. So we're looking to play some short-term counter trend trades against the higher time frame structure on GU, Euro USD, and other dollar pairs, because when you look at the market timing with how we're coming towards the end of a quarter, you can see here, like towards the end of a monthly phase, October, towards the end of a yearly phase, start of 2022, towards the end of a quarterly phase here, this low, coming towards the end of a March, right? Every time you have these significant lows printed, it's at a pretty significant timing when you're looking at the economic conditions, and you enter these pullback phases that are correlated to the overall structure on the higher time frame. as a manual retail trader or day trader, you don't want to be selling GU when it's doing a bullish pullback hundreds of pips from the lows, and those pullbacks can last days or weeks. Does that make sense to everybody? So when we're looking at the market timing coming towards the end of the quarter, when we're looking at the exhaustion right here on the dollar, where if dollar doesn't break above 99 and starts to make its way back down to 97.6 and even a bit lower, then we can play that pullback structure accordingly on the GU, expecting a pullback from the lows just to set up better risk versus reward sells on the higher time frame, that we'd watch the pullback accordingly based on market structure and price action. And same thing on EURUSD from the lows. Okay? So with intraday trade ideas here on GU, I'm still looking to play some of this pullback structure. We're just consolidating here for the time being. But nonetheless, pullbacks to 1.31300 buys, breakouts above 1.321 buys on GU, as long as we don't have any new fear tensions to price in, as long as dollar consolidates or stays softer, I'd be looking to play this bias. I would only sell GBPUSD if we break below this consolidation zone, break below the corrective bullish structure, below 3085. But that would be fundamentally induced if we have new fear catalysts with Russia come down to the table, which I don't think we're going to be having that over the next 10 days to close off this quarter. Obviously, that's just my expectation. We can always adapt accordingly. That's why I like to give those various price points of interest. Okay? EURUSD trade ideas playing some of that dollar softness from the lows. If we reject 1.10, even if we make a little bit of a deeper lower wick here and come back above 1.10, above 1.04 and 1.06, I'd still be looking for some EURUSD buys, potentially targeting these intraday high points as we, again, just as we're coming towards the end of the quarter, just as we have a lot of the fear tensions with Russia being priced in, as we have significant lows being printed on our dollar pairs, AU, NU, EURUSD, GBPUSD, and so forth. It's very normal when you look at how these dollar pairs behave that you enter these aggressive pullback phases, especially when you're looking at a new month, a new year, or a new quarter. Okay? I would only sell EURUSD and shift out of the buy bias and jump back in higher time frame sells with new market fear, dollar strength on the intraday, and breaks below 1.0985. USDCAD, I'm looking to play some of the sell side structure with the strength in the Canadian dollar, weakness in the current dollar with retest of 266 sells, breaks below 256 sells, and last but not least, US 30 stock market index. So with the US 30 stock market index, from these all-time highs, you can see we entered this corrective bearish pullback structure that brought us down to a more favorable demand zone of 32K. This was buyers liquidating stock market positions from all-time highs being printed, fear tensions coming in with Russia and Ukraine, and also pricing in the rate hike of 25 basis points to come. That's why the actual 25 basis point rate hike led to an upside move, because it was priced in. This also explained in some 1-minute webinars. Don't forget some of these 1-minute webinars I'll be posting. Literally we'll be breaking down, like this 1-minute breakdown on GJ literally played out for some buys on the dive handle, the same time making profit. You know what I mean? But anyways. And then what was I talking about? This rate hike breakdown as well. Talked about that. So right now what we're seeing to close off the quarter is an aggressive bounce from this buy dip from a lower demand zone. Stock market buyers flooding the market right now. Very strong bullish price action on the intraday time frames, coming back above that very key 34K demand zone as well. As long as we're holding above 34K at this point, it does look like stock market buyers are going to try to squeeze out what they can and run that greed train a lot further. With inflation still being high, fear tensions priced in, stock market dip loaded up, and buyers in play when you're looking at the price action and market structure. Of course, the majority of trade ideas given today are if we don't get any new fear headlines with Russia and Ukraine. Yes, there's going to be headlines flooding the news sites you may use, but that doesn't mean the market is going to give a shit about it, right? The market moves on anticipation. Buy the rumor, sell the news. So a lot of those headlines that are coming in, even though the tensions are still going on, those events have been priced in. So you have to understand that pricing in concept when you're trading the financial markets. Otherwise, you're seeing these headlines with Russia and Ukraine every day, and you're wondering why the stock market's bullish, or you're wondering why GJ's still pushing up. Why with all these tensions? Because it's priced in. The stock market, the financial markets, the economy, the economic side, the money moves ahead before anything else. That's just the system. That's just the society we live in. Doesn't matter what it is. If it's elections, if it's Brexit, if it's a pandemic, if it's a war, the money moves first. Always remember that. The market moves happen first before anything else. All right. So we have this little bit of a struggle at this bearish market structure I labeled out. And you can see we've had similar repetition here before, where from significant lows, we have these rallies that come to these price sensitivity areas, and you see the buyers jump out of positions again. But right now, we don't really have any signs of rejection. This price action on the intraday time frame is very, very bullish, right? You had that dip created, break above this price sensitivity area at 33,500. This liquidity grab here was FOMC collecting a lot more buy orders with the 25 basis point hike being priced in. Strong bullish candles, consecutive bullish candles, intraday highs being printed. Just having these minor pullback or lower time frame consolidation phases that don't fade the buyers out of the market. Okay? Even if we get deeper pullbacks, like I said, to 34K, 34,300, back above 34,600, as long as we don't have any fear tensions, Russia stays quiet and there's no new events, Japanese yen is bearish, VIX is flat, other global equity markets stay bullish, and we stay relatively quiet to close off the quarter, I'm still expecting some upside in the stock market. Okay, everybody. So we went through some key fundamental points in focus, and what the fundamentals are actively going on and how it's impacting the charts and what we trade. We went through some market sentiment and investor behavior analysis, looking at global equity markets individually and what information is telling us, looking at dollar movement individually, Japanese yen volatility index. We went through technical and fundamental analysis on gold, GJ, GU, EURUSD, USDCAD, and US30 with trade ideas for intraday trades and scalps shared across the board. Okay? Now remember, I'm not a fortune teller. I'm not a market wizard. I'm not always going to be right. Follow your trading plan. Follow your risk management plan. Focus on a positive risk versus reward ratio. Be able to accept inevitable losses that come to the market. Try to stick to your system and control your emotions as much as possible. I'll see all of you Wednesday morning for the New York scalping session, and I'll be posting some more general content throughout the week, like some 1-minute news update, 1-minute pair breakdown and trade ideas, you know what I mean? So everybody take care. Have a great night, great evening, great morning. I'll see you guys Wednesday morning, 7 a.m. Eastern. You know what I mean?